Okay, you can go.
Okay, so for what I saw today in the morning session, first of all, start with Friday. I said that I'm questioning whether we get an immediate rebalance or not today, and not trade into the July 24th bearish fair value gap. In this case, I would be very bearish for the next coming days. Right, so I'm seeing that price traded up into that, and this is at 8:24 in the morning, and so I'm bearish for Friday and the next couple days. If this is an immediate rebalance and we don't trade into that bearish fair value gap, and then on Monday at 8, same around the same time, 8:50. I saw when I got up that the daily chart had closed higher, and so right away I wasn't too much falling in love with that immediate rebalance scenario because we had already traded beneath above Friday's high, and we looked like we were going to go to Thursday's high. So just by looking at the daily chart, it start to question whether we're going to get the immediate rebound scenario. Now, ICT did say that on a video that I sent you. ICT did say that if we don't go lower on the next candle after an immediate rebalance, then it will be the next candle right after it. And if that doesn't happen, then it's gonna reverse and go the other direction. So and inverse the breakaway gap. But obviously that didn't make me feel comfortable with how Monday looked, and it did end up wicking higher. And so when I saw it wick higher, and I got up this morning and I saw that we had a candle that closed lower, I was more comfortable looking for shorts. But this was, however, 10, 11. So I got up late and I wasn't able to do the proper, from 9 a.m. and then go through everything I want to go through to take a trade. But I did watch it play out, the nice move lower today. And then you you come to today, which closed lower to target Thursday's low. And this was obviously a lot of liquidity down here because Friday stayed within that, and so we retraced a little bit after hitting it. Right, but as this big move played out, you have an order block which was left from yesterday. Right, Thursday's high was right over here. We failed to get up above that, found resistance at the consequent encroachment of Thursday's hourly wick premium, and then price right at this hour. I want to, yeah, right there, this that long candle there. When that closed lower, immediately I started to favor shorts more, and then Monday, if I go back to Monday, I was watching that order block uh form, and I did take a trade here. I started looking for shorts around here. I wanted to short in hindsight up here, but at the time I wasn't looking to short there because of Thursday's high, and I was wary about that. And ended up not getting hit. So today I'm going in with a short bias. I noticed that midnight open is down here, so we are way above midnight open, and we're in a premium. If you look at the high of the day or whatever, where that's Monday's high, and then the low of the day. So that is a dealing range, or you can also look at the dealing range from this high all the way down to that low. That high took buy side, and this high took sell side. This low took sell side. So wherever you want to look, we're in a premium, right? And therefore, the shorts are heavily favored. We wick up into the order block, quickly close away from it. So the 10 o'clock hour, I'm only really looking to go lower and clean up this trend from London, aiming for the low hanging fruit or the outer sell side liquidity here. Now, when I got up, I saw the 15-minute bearish fair value gap, and I looked at the chart right as this candle closed, right, and I saw the 15-minute bearish fair value gap, and I wanted it to trade up there, but because I was doing my morning stuff, I didn't trade on it. But by the time I got on the chart, it had just gotten away from it. I started studying how price is delivering. I saw that we had a 5-minute short-term high that got taken out. This was an initial run higher, initial run lower, and then we had a small run higher just to take out those people who thought that this was going to be support down here, and then it continued to run lower. Now there was also a bunch of immediate rebalances, right? So we had one here, and then we rebalanced there, there, there. We continuously immediate rebalanced. We started to slow down as we were leaving larger gaps and trading into them, right? So no longer were there up here. There was a big breakaway gap, and then notice how after we have the 15-minute SIBI that is an entry, there is no more, down close candle that gets disrespected. So all the candles just continue to close lower except for these two small up closes. Up here we have an up close and then we hit sell side down there at around 12 and we start to retrace higher after that around 12 or 1 in lunch hour. And this was the trade that I would have taken. Either I would have gotten at the turtle soup high, probably would have waited till that fair value gap there, that bearish fair value gap with the inverse fair value gap, gotten in around there, and then it continued. It would have went lower. I would have probably gone out 40 points or midnight open, whatever. This was the trade that I was kind of watching as it was playing out. I missed the entry because I got on charts late, but it was still very nice and very quick, lower, almost no drawdown like I usually like. And yeah, that's the review for today.
Okay, sounds good, man. I'm gonna share my screen now, and there was also good points that you mentioned that I did not see when it was happening in lifetime. And I'm gonna tell you my whole thought process when it was happening live, and I'm not gonna throw in a bunch of hindsight things. So I'm gonna share my screen now, and you can criticize me.
Yeah,
Oh, I think I'll do it from Discord. Okay, can you see my screen?
that's usually.
Okay. The Well, I want to start first is on the daily time frame. So about the immediate rebalance that you spoke about just now, about how this candle here rebalanced with this wick slow, and then we had this candle here that was hesitant to move into Thursday's low. I mean to Thursday's high. When I first saw this, I was actually thinking that that move was gonna go and breach Thursday's high, because as you can see from yesterday's move, if I label Thursday's high, you can see we got really close to Thursday's high, and then we had this big candle here that engulfed this manipulation leg, and that gave us an order block. In hindsight, now when I look back, I can see that this order block still held until today. Um, what I was thinking when I first got on charge today, it was at around 9:30. I saw. Let me go a moment. Um, okay, so around here, where is 9:30? Okay, so around here, I saw that this candle here moved violently into the opening range gap, and I found some resistance off of the opening range gap, and as well there was a 5 minute gap somewhere here, and also this 1 minute gap here held. Another thing that I want to mention for this one here, for this move lower, after we start seeing rejections off of the opening range gap, we started seeing this move higher. What I wanted to see was this low, high, and then a lower low, and then a distribution higher, engulfing a move lower, which would have swept this low here, and then started to move higher into Thursday's high. We didn't get that, but now looking at our hindsight and seeing how we're rejecting off of that order block, the hourly, 1 hour. Yeah, that makes so much more sense now. And for intraday price action, wait, I forgot to mention about before hour. Not put on the weekly profile. Yeah, so if you notice here, we had this breaker foundation. So we had the high and then the low. And then what I was looking for to happen was um, for Monday to go up and breach A and create the C, and that would be taken as manipulation. And then we would have this move lower here to take out A presumed B and then start distributing lower. And then hopefully use this leg higher as an order block, and then reach into my daily target, which was the market maker sun level, which I'm seeing to be around this low. But what I see now from market close is that we're heavily pushing through this volume imbalance, and this volume imbalance was the only thing that was really blocking the market maker sell model low from last week. And it's nice to see that it's also Thursday's low. So lots of liquidity here, and you see the way that we reject off of the volume imbalance. This tells me that this was a market shift, and it was not a sweep on liquidity. So I'm still looking for our lower prices. Okay, I'm gonna move into intraday price action now.
Uh,
Okay, so for intraday, yeah, as you said, there was lots of immediate rebalances, hinting lower prices, and this gap here, which basically delivered this whole move lower. And yeah, within this like this price segment here, I don't think I took any trades, or I don't remember. Yeah, I didn't take any trades until we got a,
okay.
a slight retracement there. I think if I go into the 5 minute, mm, yeah, okay, so I think you can see it better on the 1 minute. Okay, here. So once okay, actually, let me measure the full range. Okay, so you're familiar with the I mean premium of discount and discount of the premium and the stuff, right?
Yeah.
Okay, so when I saw this range being created, and with this low, we created equal lows with another low far to the left, I thought that, okay, I'm gonna do a mechanical discretionary trade here and try to hunt these equal lows with a retracement to a fair value gap from an inversion. And the way I implemented the premium of the discount was, notice this big displacement move here. When I first saw this move here, I've seen this move so many times, it's hard to not predict that most of these gaps here are not going to get filled. You can see this small gap here as a breakaway, this one here as a breakaway, and this one here was the only gap that was retraced into. And it was good enough for me, and I wasn't looking for a big retrace higher into the discount because as I just said, the breakaway gaps. And also this gap here was the range condition from this third quarter high and then this final quarter low. So this was the range condition. This gap here was a range condition for whether we deliver higher or lower. And once I saw this accumulation here, I was thinking, okay, so we have a bunch of low resistance liquidity here. We have equal lows. We have a accumulation within a gap and also within equilibrium. And once I see displacement lower and a signature that I want to move lower, I'll try a short. And as you can see, we inverse this gap here. I was a bit late because I was off the charts, but I had an alert set. And I entered on this candidate retrace into this volume imbalance and target equal lows and little to no drawdown and delivered missed. And as for later in the PM session, I did not trade much because it was kind of accumulation, big expansions, and then as you can see now we had this big run higher as accumulation, some more ranging around, and then we had the market close move, which took all this liquidity out. That's basically it for my intraday and my daily. But what I learned from you today is that immediate rebalances leave breakaways because what I didn't know was that actually the breakaways that happen underneath immediate rebalances don't have to be tapped into. And I think I've made that mistake for a while now because I've I learned immediate rebalances from economics, and how he teaches them is like somewhat different. He teaches them where like a gap, for example, let's say this gap here, if it was immediately rebalanced, it would start moving in that direction. It wouldn't move lower. Yeah, that's it.
But does he teach it with the breakaway gap?
The only way he taught it was with just a gap that's soon to be formed, but then it gets immediate rebalance and starts moving in that way. That's the only way he teaches it.
Oh, okay.
Okay, thank you for your time, man. Appreciate you.
Welcome.
I'm gonna end the video now.